Give you a little bit of background about a call that took place earlier this week between the President of the United States and CEOs of three of the largest U.S. banks, Bank of America's Brian Moynihan, Citigroup's Michael Corbat, and J.P. Morgan's Jamie Dimon, all of whom were in Washington for a previously scheduled meeting on issues related to the Bank Secrecy Act and anti-money laundering efforts. But at this meeting at the Treasury Department, after this meeting, Treasury Secretary Steven Mnuchin, I'm told, ushered these CEOs into a separate room and said the president is on the phone and would like to talk to you about the economy. What followed that was a roughly 20-minute big picture conversation about trade, about global growth, and about the Federal Reserve. And here's what I'm told by people familiar with the call was discussed. On trade, I'm told that the CEOs told the president that trade issues are rattling the business community, that it's affecting business confidence and capital expenditures. The response from the president was that he was somewhat receptive to that argument, but also reiterated that he likes tariffs. On the global front, they discussed Hong Kong, Mexico, India, Pakistan, Brexit, and all of these other non-U.S. forces that are affecting the economy and perhaps affecting markets here in the United States. On the Federal Reserve, it was largely agreed that a 25 basis point rate cut by the Federal Reserve is not going to affect capital flows at large. The president reiterated that he believes the Fed should not have raised interest rates last December and that it needs to do more. So that's the general gist of this call that took place. I want to reiterate that it happened after a previously scheduled regulatory meeting, but certainly indicates that the president is very interested in what is driving markets here, what's driving forces overseas, and what that means for his White House agenda. Scott?
No, the question, Kayla, and it goes to some of your reporting earlier in the week as to what the narrative inside the White House is. And you know, you had reported a couple of days ago that the president and Peter Navarro, who's the sort of the point person on the trade thing, are the only ones thinking that the Fed is the issue, or in the very small minority of those that think the Fed is the issue, while everybody else essentially thinks it's trade, and apparently so do the bank CEOs.
And these are people who have a 30,000-foot view of the global economy, who are watching where their clients are investing, where wealth is moving, and they tried to communicate, I'm told, that trade is the number one worry for them that they see affecting the global environment. I will say, I'm told these CEOs did say that China needs to be dealt with, that there is a problem there, but that they agreed that the current uncertainty and the current landscape is affecting business confidence and is affecting capital expenditures.